Yeah, this is Chennai batch, right? Yes, you can just move your head because muting, I have already muted you people. So this is Chennai 1 batch, right? CN1. CN1 is Chennai 1. Okay. Okay. Fine. So we'll just wait for a minute. There are still people joining. CBE means Coimbatore. Coimbatore is also there. Okay. Okay. So Coimbatore morning batch and Chennai morning batch. Yeah. Before starting, see, as you can see, I have already muted you people, right? So what we'll be doing is after completing a particular topic, you will be allowed to raise your hand. You might be aware that you have an option of raising hand, right? So once you raise your hand, then I'll ask you to unmute and you can raise up your query if any. And from today's timetable, I have seen one thing that you have a separate session for doubt solving also, right? Some half an hour of doubt solving is given after we complete our lecture at 10:10. There is a small 5 minutes gap, and from 10:15 to 10:45 we have a doubt solving session, right? So there also you can cover up all your doubts. So what you have to just do is you have to note down your doubt, right? Wherever possible, I'll be opening up the window here itself. But say for instance, if the window is not possible here to be opened for doubts, so we have a separate window of half an hour. You just note down your doubt wherever you had a query and you can clear up your doubts in that particular session. Correct? So we'll try to complete all your doubts here itself, but still further you have doubts which is taking lot extra time period, then we will shift that doubt in that half an hour session so that our lecture is conducted smoothly. Correct? Am I clear with this? Fine. Now, am I audible to everybody properly or is there any problem? Am I audible? Lighting will improve because it is still not completely sunrise over at my place. So in the next 15-20 minutes, the sunlight will be proper and the video conditions will be improving in the next 15 or 20 minutes odd. But is my voice clear to you? Are you audible properly? Just move your heads. If not, say no. If yes, okay. Is it audible? Yes, fine, audible. Okay. Now I'm seeing many of you have not switched on your cameras. So I think already instruction has been given to you to switch on your cameras. So please do it. Right? Because I also have an authority that if a person is not switching on the camera, I have the authority to remove you from the meeting. But then it will again it will be creating a problem for you that if I once remove you from this particular meeting ID, then again you have to deal with the timetable people and get yourself again admitted in the same group. Right? So keep your cameras on. If you have a genuine reason, like for example, you have seen so many memes getting created on Zoom that you're sitting in front of the camera and your dad is walking behind wearing a towel. So in that case, you can just stop your video, right? That is absolutely fine. And then once he's gone, then again, you can continue switching on your camera, right? So that is allowed. You can do that. If there is a genuine problem, somebody is doing something behind you, then definitely you can stop your video for that particular moment of time. Correct? Now I'll give you my introduction first. My name is CA Karan Angarkar. I am a practicing chartered accountant from Mumbai. I have my own practice, plus I deliver lectures at JKSC. I generally visit to Chennai. Last year also I had visited. The only difference this year is physically I am not visiting Chennai, but I'm teaching all the wonderful students of Chennai, right? And I had visited to Coimbatore also last year. So Coimbatore, Chennai, and if there are some foundation people, if you had already come to the branch last year, so if you might have also seen me over there also. So I had visited Coimbatore, Chennai. So those cities are not new to me, right? So I know it's a full English batch and you need not worry. We'll be doing everything in English properly and all your doubts and queries will also be cleared in English only, right? We'll not be using any Hindi or any other language, correct? We'll be using strictly English only in this batch, right? Now, the first thing you might be aware in your timetable that it is accounting standards lecture, correct? This is something new for you people. Accounting, you have done many times. 11th standard, 12th standard, CA foundation. But accounting standards is something new that you are doing for the first time, right? So before starting with accounting standards or what are accounting standards, we will first focus on what is the marking scheme, what is the paper pattern for accounting standards, and what is the efforts that we need to put for accounting standards, because that is more important. Nowadays, students are like, sir, subject, you please tell us later, but please tell us how much time we have to put, how much effort we have to put, and what is the effort to marks ka ratio, because that is also important. Na? Effort is to marks. The ratio is important, correct? Because there are some subjects in your CA Inter whose marking scheme is less, but you have to put lots of efforts for that subject. Or there are some subjects where the mark is high, but effort put is very less. And accounting standard is one of them, where the marking is almost at par with your direct taxation or your financial management, roughly 60 marks. But the efforts that you have to put for learning accounting standard is way less, or I would say exactly half or less than half with respect to your direct taxation or financial management. Correct? So let us first understand the marking scheme and the paper pattern of accounting standards in your exams. Right? So I think this is it now. We don't have further, still people are joining. Okay. Now I'll be sharing my screen with you people. Right? So once my screen is getting shared, you will be seeing my shared screen and a small window of my video at the bottom or at the top of your screen. I think already your lectures have been done, so you are aware about it, how it will be shown, right? Is my screen visible to everybody? Right? Is my small window of the video also appearing? Right? Fine. So we'll start. Accounting standards. Right? Now, what are accounting standards? Why are we learning accounting standards? What is the applicability of accounting standards? We'll all do later in the later part. First, let us understand for how many marks accounting standard comes, in which areas it is covered, under which paper it is covered, and what is the total number of accounting standards we have to learn, and what is the time that we are going to provide for learning accounting standards. Now, sir, your accounting standards will be covered in your paper 1, which you call it as accounts, or some also call it as financial reporting. And it is also covered in your paper 5, which you call it as advanced accounts. Sir, it is covered in both. Yes. So it is a part of your accounts and it is also the part of your advanced accounts. Right? Now, in paper 1 accounts, your question number 1, if you are aware, is a compulsory question. Right? And this compulsory question is for 20 marks. And sir, this compulsory question of 20 marks comes from accounting standard. Correct? So sir, how many questions are we required to solve in this question number 1 main heading? Right? So sir, it is 5 marks into 4 questions. 5 marks into 4 questions compulsory. So whether you like accounting standards, you dislike them, whether you have studied it or you have not studied it, it will still come for compulsory 20 marks in paper 1. Correct? Then you have optional questions. From question number 2 to question number 6, there are total 5 questions. 2, 3, 4, 5 and 6. Correct? Now in these 5 questions, you have to solve any 4. And the weightage of these questions are 20 marks each. Correct? Now, many a times it has seen that in question number 6, there are 4 parts, A, B, C, D, of 5 marks each. Or there are A, B, C, D, E, 4 marks each. And in those 4 marks or 5 marks questions, again accounting standards questions may arise. It may arise. It is not compulsory. It may arise. Right? So in question number 6, you can get AS for 5 marks or 10 marks. Right? So if you have studied accounting standards very much thoroughly, so what you can do is you can always opt for question number 6 in exam and leave it for option for any of the other question. So your rough weightage will be roughly 25 marks or 30 marks in exam from your paper 1. Correct? And the same logic will also apply for your paper 5. So in paper 5 also, your question number 1 will be compulsory for 20 marks. That is same, 4 questions of 5 marks each. And your question number 6 will be for 5 marks or 10 marks with respect to accounting standards. So the weightage would be either 25 marks or 30 marks. So if you see an overall weightage, if you see the overall weightage, it can be 50 to 60 marks. Correct? Now you have the marking scheme in front of you. Now, can I say this marking scheme is almost at par with your direct tax? Yes, this is almost at par with your financial management also, because FM is also for 60 marks. Direct tax is also for 60 marks. Correct? Now, sir, I'll tell you one thing. The efforts that we are putting to learn accounting standards is almost half that you have to put with respect to your direct taxation. Exactly half, or I would say less than half. So less effort and higher marks. And this is very important for all you future chartered accountants, because your accounting in the future is going to completely depend on what? Accounting standards. Because in your 11th standard or your 12th standard, whatever accounting you did may not be as per the standards because you were at a very lower level. But now, since you're going to become chartered accountants, your level automatically rises. You will be doing the accounting of various multinationals or corporates. So it will be heavily important for you to understand the standards properly and record the transactions in your financial statements by applying proper accounting standards. Right? Now, sir, how many accounting standards do we have to learn? I'm just writing the accounting standards numbers for group 1 first, and then I'll write it for group 2 also. And then the total we have to learn. These many standards are we have to learn. Now, if I talk for group 1, that is your paper 1, AS1, AS2, AS10, 11, 12, 13, 16. AS1, AS2, AS10, 11, 12, 13, and 16. Right. So one more point that we'll be learning in our group 1 is intro of AS. So introduction, then accounting standard number 1, 2, 10, 11, 12, 13, and 16. So total 7 accounting standards we are going to learn in your group 1. Plus we will also be learning the introductory part of accounting standards in the group 1 itself. Right? Now let us go for group 2. Sir, in group 2, what we are going to learn? Sir, in group 2, you will be starting with AS 4, 5, 7, 9, 17, 18, 19, 20, 22, 24, 26, and 29. Right? So here you will be learning total 7 accounting standards, and if you take the introduction also, then total 8. And here you will be learning total 12 accounting standards. Right? And there are 2 more accounting standards which are covered, but they will be taken separately as a topic. AS3, cash flow statements. Accounting standard number 3, cash flow statements, which is a part of your group 1 only. AS3, cash statements. And I think that might already be completed in your batch also. It might have already completed, or it will be done. Right? but we don't take it as a part of accounting standard because it's a lengthy topic. So that will be taught separately with separate questions coming under it, right? So AS3 cash flow statement is also a part of accounting standard only, but will be taken care by some other faculty. Correct? So total, it may come in exam for roughly 50 to 60 marks in the form of accounting standards, right? Total 19 standards you have to learn. Roughly around 65 to 70 hours of working will be putting for this, and followed by then your efforts, correct? Material is already provided to you. Have you been already provided with the study material? Yes or no? Yes. Okay. Have you been provided with some handwritten material also, PDF like this? I'll just show it on your screen. Have you been provided with some handwritten material like this in your link, any of your links in your timetable? No. Okay, no issues, no issues. I want everybody of you to please take a separate notebook for your accounting standards, right? And I'll have a word with the timetable department to share a link of these notes also with you, so that if you have a printer at home, you can just take printout of all the soft copies that you'll get. You can take it in black and white, obviously. No need to go for any color printout as such. And you can just note down the important points and mark the important things that I go on teaching you people, right? Rather than simply wasting time on copying everything. Because then some people, what they do, they don't listen to the explanation. They just keep on copying, copying, copying. Because filling the notebook is top priority. So my sincere request to you people, the screen will be shown to you continuously when the explanation is going on, right? So I would suggest you please focus on the explanation part. Wherever required, I may give you some time to copy, but sir, I cannot give you all the time in the world because even I have some time restrictions, correct? So I can give you 5 minutes, 7 minutes, or to copy a particular point. See to it that you are doing it within that time. And if at all you are not able to complete that in 5 to 7 minutes, I will ask the timetable people to share the copy of this with you people, so you can copy this after your lecture is over, right? Some people have a very fast writing habit, so they can complete it, right? And focus more on the explanation rather than just simply filling up your notebook. Am I clear with this point? Right? So let us start with the first topic, introduction to accounting standards. Intro to AS. Right? Now, sir, what are accounting standards? Or why do we have accounting standards in India? So my first direct question, what are accounting standards? If anybody wants to answer it, just raise your hand. I'll unmute you. You can give me an answer. So it has to be an interactive session. You can definitely raise up your hand and I'll ask you to unmute and you can give me an answer. My first question, what are accounting standards? Accounting standard. So the name itself suggests what they are. Anybody? Just raise your hand. I'll unmute you.
Sir, good
Yes.
morning.
Yeah, good morning, madam.
Yeah. So accounting standards, it's like the general standard being practiced by every all over the world, so that we can maintain an uniformity in preparing the accounts. So if it is not there, then we will lose uniformity. We will be preparing our accounts as our own wish. There we lose uniformity. There will be some error type like that. So to have a standard uniformity, these standards are being followed.
There's some connectivity with right. I'm audible now to everybody. So again, my same question. I'm not audible clearly. My voice is not clear. Voice is not clear. Yes.
Sir, accounting standards, it's like a format being followed by everybody, so that we can maintain a uniformity in preparing accounts, so that it would be
Okay.
easy for comparison and everything.
Okay. So she says that sir, accounting standards are certain standards which are made. If followed by everybody, then there will be a uniformity in accounting. And if there is a uniformity in accounting, then definitely we will have the more important point, that is comparison of the financial statements. So madam, comparison will be possible with the other financial, right? I would say the other organizations also, or it will be possible with us only.
It would be helpful for comparing even others also of
Okay.
same industries, something like that.
Okay.
It's
Obviously, we'll be comparing with the same industries only. Say I'm a tire manufacturer, so I would always be keen to compare myself with other tire manufacturers. So I would say intercompany comparison is also possible and intra-company is also possible. Intra means within our organization. Intra means within our organization. So in layman's language, I'll say, sir, accounting standards are certain rules and regulations that has to be followed in the preparation of general purpose financial statements. In the preparation of general purpose financial statements. To get what? Point number one, sir, to ascertain uniformity. Second important, to get comparisons done properly. And most important, disclosure requirements of certain material information in the books of accounts. Right? So, sir, these standards are important and to be followed by majority of the enterprises. But, sir, why were these accounting standards actually brought in India? Like, what was the requirement? Now, as we told, uniformity, comparison, disclosures, and all fine. But, sir, everybody might be doing in the same way only. So, why to bring standards? The answer is no. See, every accountant feels that he is God. Whatever he does is absolutely correct. And this you will come to know when you're actually going for live auditing purpose. So, when you will visit your client's place, your accountants will be doing completely messed up with all the financial statements, and they will always try to show you that I am correct. Your accounting standards are wrong. I am correct. Whatever I do, I am correct. You are wrong. Your standards are wrong. I am correct. So every accountant feels that he or she is correct, hence creating a huge chaos or problem. So government came to know about this because these accountants are not trustworthy anymore. So they went to the most important body in our country who looks after these financial affairs, that is ICAI, Institute of Chartered Accountants of India. So they went to ICAI and they say that because everybody is making financial statements as per their own will and as per their own wish. So we want you people to standardize certain principles, standardize certain rules with respect to accounting. Because, sir, we are in a complex environment. So that since being in such complex environment, it becomes difficult for understanding the treatments of various transactions. So we being in a complex environment, we have to learn various things. Point number one. Point number two, lots of foreign companies are coming into India for doing business. So our financial statements that we make should be in line with the financial statements that we make, that those people make abroad. So all these reasons made government to go to ICAI and please frame some standard rules for accounting in India. So ICAI said, fine, we will do it. So somewhere in the year 1977, that is 21st, to be precise, 21st April 1977, Institute of Chartered Accountants of India formed something called as ASB. And this ASB is nothing but it is called as your Accounting Standards Board. Accounting Standards Board, ASB, was formed by ICAI somewhere in the year 1977. Date is also given to you. So, sir, what was the roles and responsibility of ASB? Sir, ASB was given the charge for creating accounting standards in India, obviously with consultation of the central government and one more important body, MCA, Ministry of Corporate Affairs. So MCA people, central government people, ASB. So ASB was the main body creating accounting standards for various situations. Again, taking inputs from central government, taking inputs from MCA, and finally bringing accounting standards in the country, which is applicable to almost all the entities. Right? So, sir, do you think ASB might have done everything from scratch? Do you think? From scratch? The answer is no. Sir, we are Indians. We will not do the things directly from scratch. We will try to snatch something from somebody and then develop of our own. Right? So what we people did? Sir, we people adopted one country's ready-made accounting standards, the country where everyone likes to go, especially from South. I am also a South Indian guy. I am from Hyderabad. So at our place also, many people are always willing to go to this country, especially the engineers. I don't know about the chartered accountants, but engineers would always like to go to that country called as United States. Once complete with the BTech, they will go for that exam, IELTS and what other exams they have to give, and they will fly to the US for doing MS. So what did ASB do? ASB told, "Arey sir, US already has accounting standards, which is called as US GAAPs, which are called as what? US GAAPs. Now, what do you mean by the word GAAPs? Sir, GAAPs means generally accepted accounting principles. I will repeat. US GAAPs means GAAPs का full form is generally accepted accounting principles. So US people already had GAAPs. So what we had to do is Control C, Control V. Control C is copy, Control V is paste. So copy paste, correct? And to avoid the copyright issues, wherever and, full stop, comma, is, that was given, correct? And some modifications were done as per our transactions, because some transactions done in the US and some transactions done in the India are different from one another. So we modified certain things as per what practices we follow, standard practices we follow, and came up something called as Indian gaps. Indian gaps means Indian generally accepted accounting principles, which we call it as what? Accounting standards. So in your syllabus, we will be having only the Indian gaps, that is accounting standards. Total 21 accounting standards are covered in your syllabus, as I already told you. 19 will be done by us in the class and 2 others will be done as a separate chapter. Are you getting this point? Right? So ASB took US gaps and created our own Indian gaps, which we call it as accounting standards. So overall in India, till date, ASB has issued, or I would say ICAI has issued 29 accounting standards. How many? 29 total accounting standards are issued by ICAI till date, but only 27 are continued. 2 accounting standards have been discontinued. AS6 accounting standard number 6 is discontinued because it is merged with AS10 now. And AS8, that is research and development, is being discontinued because it is merged with AS26 intangible asset. So AS6 was accounting for depreciation, which is now merged with AS10 fixed assets. And AS8 was research and development expenditure, which is now merged with AS26 intangible assets. So we have now 27 active accounting standards, out of which 21 are there in our syllabus. So remaining 6 we'll be learning in final. Is this point clear to you? Right? Now I'll be going with the definition of accounting standards, the proper book definition. Now whatever I told was in the layman's language, ki sir, accounting standards are nothing but certain principles or rules and regulations made for the purpose of uniformity, comparability, and disclosing certain crucial information in the financial statements, which will be helpful for the users to understand what I have done, which you call it as disclosures. Right? You might have also learned this point, disclosures, before. Now this is the definition. Accounting standards are written docs. Docs means documents. Accounting standards are written documents, comma, policy documents issued by experts. Now who are those experts, sir? It is ICAI and sometimes Ministry of Corporate Affairs also, government, etc. Covering what? The recognition criteria, measurement criteria, presentation criteria, and disclosure of accounting transactions in the books of accounts. I will repeat. Accounting standards are written documents, comma, policy documents issued by experts, government, etc., covering recognition, measurement, presentation, and disclosure of accounting transactions in the general purpose financial statements. This is the book definition. And on this definition, you can get a 5 marks question as well. Now, what is that 5 mark question? I'll just discuss it in the next 5 minutes. Right? So these are the written documents by the experts, which will give you the detailing of various accounting transactions that we come across in our day-to-day accounting. Right? Now, what are these recognition? What are these measurements? What are these presentations? What are these disclosure requirements? All I'll be explaining to you in detail. Correct? Now, you can please take a note of the definition. Right? You can please take a note of the definition. Just give the heading, what are accounting standards, and take a note of this definition. Now please focus. When I talk about AS, covers what? Now sir, AS covers these many things. Please stay focused. First, objective. Second, scope. Third, recognition criteria. Fourth, valuation and measurement. Fifth, presentation in general purpose financial statements. And sixth, disclosures in general purpose financial statements. Right? Now please understand one thing. Sir, we learned the definition of accounting standards, and in that we came across that, sir, AS are required for various accounting transactions. So from that one point, it is very much clear that accounting standards are to be followed in the preparation of your financial statements, your general purpose financial statements. Now I'll just repeat what are your general purpose financial statements. Sir, your general purpose financial statements will cover the following. Sir, it will cover a profit and loss account. Correct? It will cover your balance sheet. Sir, it will cover the cash flow statements, which we call it as CFS. Then it will cover statement of changes in equity. And last but not the least, the most important point, notes to accounts. And notes to accounts are called as what, you know, disclosures. So any material information with respect to your financial statements, if it has to be disclosed, so notes to account is the place where we'll be disclosing all these things. Correct? Now, sir, what do you mean? What do you mean by these points that you have written on the screen? So point number one, objective. Now, sir, objective means whenever we are starting a particular accounting standard, we will be first understanding why are we learning this particular accounting standard. Now, for simple example, let us take AS2, valuation of inventory. Now, so what is the objective of learning valuation of inventory? Sir, the name itself suggests its objective, valuation. So what are we going to learn in that, sir? We will be learning how to value the inventory. What should be the cost of the inventory? What should be the NRV of the inventory? And most important objective, what should be the value of the inventory as on the balance sheet date? Means whether it is cost or it is NRV, whichever is lower, you might have already learned this formula, cost or NRV, whichever is lower. So it is given by who? Sir, it is as per AS2. Because AS2 is very clear that I will teach you how to calculate cost of the inventory. I will teach you how to calculate the inventory of the, how to calculate the NRV of the inventory. Plus, I will also tell you, as on balance sheet date, inventory should be valued at what? At cost or NRV, whichever is lower. That is the objective. Correct. AS10, property, plant and equipment, aka fixed assets. So property, plant and equipment has a clear objective. Objective of what? Sir, I will tell you the in and out of fixed assets. AS10 says, I will tell you the in and out of fixed assets. How to record it, how to value it, whether the PPE, that is fixed asset, will be recorded in the balance sheet or not. That also I will tell you. How to charge the depreciation, how to do the revaluation, everything I will tell you. That is the objective. So every AS has an objective behind it. Why are we learning it? That is point number one. Right? So I just put over here, objective means why are we learning the AS. That is what our objective is all about. So second point is scope. Scope means where it is applicable and where it is not applicable. Where it is applicable and where it is not applicable, that will be decided in the scope itself. So sir, we'll be learning the positive list or the negative list. So it is always advisable learn the negative list. Because once you read the negative list, it is a very small list. Rest all things are covered in the AS. Now say for simple example I give you, let us take AS 13, accounting for investments, or you say investment accounting. Sir, investment accounting is very clear. It says that I will cover only accounting for investments, but I will not cover the incomes that you earn from the investments. I'll repeat my point. AS 13, accounting for investment, says that I will cover the accounting treatment of investments, but I will not cover the accounting treatment of the incomes that you earn from these investments. Means you earn rent, you earn interest, you earn dividend, you get capital appreciation. AS 13 says I will not tell you the accounting treatment of these because it is taken care by some other accounting standard, that is AS 9, revenue recognition. Because end of the day, interest, dividend, rent, capital appreciation, all are your revenues, and that will be taken care by what? AS 9. So the scope will decide this AS covers what areas and which areas it does not cover. So scope will be areas covered and not covered by the AS. Correct? Third important point, recognition criteria. Now, recognition criteria means whether this particular item of income or expense or asset or liability will be recognized in the books of accounts or not. That is the recognition criteria. Now, for simple, I'll take AS 10, property, plant and equipment. And I will also take AS 26, intangible assets. Both these accounting standards are made for assets only. One AS 10 is made for tangible assets and AS 26 is made for intangible assets. Right? I'll give you an example for understanding the recognition criteria. Now, this is the Apple Pencil, which I am using to write on my iPad. Correct? Can I say this is a fixed asset? Can I consider this as a fixed asset? With the iPad, say take both iPad plus pencil, I took it for 55,000 rupees. Can I take this 55,000 rupees as a fixed asset? Definitely yes, because I am going to use it for a long period of time. Long period of time means greater than 1 year. And I have already been using from last 2 years. Correct? Now, the next point is, sir, whether this iPad and pencil should be recognized in the books of accounts as a property, plant and equipment. Right? The next question will arise, sir, whether I should record this as a property, plant and equipment in the books of accounts. So I will go to AS 10. I will ask AS 10, shall I record this? AS 10 says, I have given a recognition criteria. I have given certain conditions. If you fulfill my conditions, you can definitely record your iPad and pencil as a tangible fixed asset in the balance sheet. I don't have a problem. But if you don't fulfill my conditions, you cannot take this iPad and pencil in your balance sheet as an asset. You rather expense it out. So, sir, what are the conditions? Please be careful. Sir, the condition says you can calculate the cost of the iPad and that pencil reliably. Or I would say you can measure the cost reliably. Can I do it? Can I measure the cost of the iPad and pencil reliably? The answer is yes. Why? Sir, I have a purchase bill. Sir, I have a purchase bill where the cost is given 55,000 rupees. So can I say have that 55,000 readily available with me? Yes or no? Yes, I have it. Right? So first condition is fulfilled. Now the second condition, which is very, very important. Now the second recognition criteria says, if future economic benefit associated with that asset flows to the enterprise. I will repeat, if future economic benefit associated with the asset flows to the enterprise. In simple words, I am going to earn money from that tablet. I am going to earn money from that iPad in the future. Am I going to earn money out of it? Yes or no? Yes or no? Am I going to earn money out of it? The answer is definitely yes, because I'm earning it right now. I'm taking a lecture using my iPad only. So can I say this iPad is helping me to earn money? Yes or no? Congratulations, the recognition criteria is met. Record it in the balance sheet. Record it in the balance sheet. Are you understanding this point? So many accounting standards, almost wherever the accounting standard is with respect to recording of certain transaction, the recognition criteria are given. But on the other hand, I'll give you one more example. I have a 5-year-old son who is also having his online classes for senior KG. Senior KG also is having online classes. He's not attending, that is a different story, but he has online classes. So for that online classes also, he has an iPad, for which I had to shell out from my pocket, obviously. So now the point is whether my son's iPad will be shown in my balance sheet or not. Point number one, can I measure the cost? Can I measure the cost of that iPad? The answer is yes, because I have a valid purchase bill. Now, point number two, am I going to earn revenue from my son's iPad? Sir, definitely not, because my son doesn't allow me to touch his iPad. He's 5 years old, but he knows how to set a password and how to use that fingerprint. So he doesn't allow me to use his iPad. 5 years old. From now only they want privacy. Right? So he's not allowing to use his iPad. So technically speaking, I cannot earn any revenue from my son's iPad. So it does not fulfill the recognition criteria of AS10. Congratulations, you cannot record that iPad in your books of accounts. Right? So recognition criteria will tell you whether the item of income, expense, asset, and liability to be recorded or not. Correct? So once you have decided to recognize a particular transaction in the books of accounts, the next important point, how to value it or how to measure it. Value it or measure it in terms of money value. I don't know whether you are aware about this or not, but in your first year, that is junior college first year, 11th standard, there was something taught to you called as money measurement concept. Do you remember? Money measurement concept. And money measurement concept said that a particular accounting transaction can be recorded in the books of accounts only if it can be measured in terms of money value. So accounting standards will tell you how to value or how to measure the cost of a particular item of income or of a particular item of assets or liabilities. Now, as I told you, I purchased the iPad. So how will you find the cost of that iPad? So it is already given in AS10. You have to consider the purchase price. You have to consider the non-refundable GST. You have to consider any other cost incurred to bring the asset to its present location or condition. So all the measurement criteria or the valuation criteria are given in the respective accounting standard. Say I would say depreciation. Like depreciation as per SLM or depreciation as per WDV is also one of the way of measuring depreciation. It is also covered by AS10. Right? How to calculate the NRV of a particular item of inventory. Measurement of NRV, sir, covered by AS2. How to measure the cost of the inventory is covered by AS2, valuation of inventory. Investments, sir, I purchased shares. Shares are my investment. Super. So what is the cost of the shares to be recorded? Sir, AS 13 gives me measurement criteria, that purchase price of the share plus brokerage paid to the broker house plus GST paid on that brokerage plus the stamp duty that you are paying for purchasing those shares. Sir, all these are the part of the cost of those shares. And who gives this criteria? Sir, accounting standard. Which? 13. Right? So majority of the AS which covers those particular transactions will give you the valuation or measurement criteria. Right? So I would write it over here. Valuation or measurement, that is the values at which items should be recorded in general purpose financial statements. Is this point clear to you? Can I say this is the common presentation that you do for your fixed assets in your balance sheet? Yes, who gave this? Sir, AS10 gives this presentation in the financial statements. So accounting standards will also tell you how to present these items in the books of accounts. Are you getting the point? Some people also show it in this manner. Say this is your balance sheet. Fixed assets at the gross value, correct? And on the liability side, you will have provision for depreciation. Am I correct? You have also learned this provision for depreciation method in your CA foundation. So this is also a presentation. Right? So who gives this? Sir, AS10 gives me these two presentations. Right? So presentation means how to present various items in the GPFS. Right? And last but not the least, disclosures. Sir, disclosure means disclosing material information regarding your various transactions in the books of accounts so that the user of the financial statements can understand your financial statements properly. Now, what do you mean by material information? Sir, material information means certain information which can change the decision making of the end user, or it can change the decision making of the management also. So there are many informations. I would say there are many transactions which take place which are material for the enterprise, and it is important for others to understand what you have done. So you always have to give a disclosure with respect to that transaction. Now, say for instance, your current year profit is 20 crores. Correct? Now, this 20 crores of profit is achieved because you have received 5 crores in the form of government subsidy. You have received a government subsidy worth 5 crores. That is the reason why you have reached to a profitability or a net profit of 20 crores. So, sir, this 5 crores of government subsidy is material enough to be disclosed. Means you have to give a disclosure in the notes to account stating that 5 crores of government subsidy is received during the year, because of which our net profit is increased from 15 crores to 20 crores. So when you disclose this information, the user of the financial statement comes to know that, acha, this 15 crores is because of your operations. And this 5 crore is because of the subsidy. Hence, your total profit is 20 crores. But if you don't give this disclosure, can I say it will be a bit misleading for the investor? Investor will think, wow, 20 crores of profit, superb. We'll invest more in the company. But is that true? The answer is you have earned 20 crores, but not because of all your efforts. 15 crores because of your efforts and 5 crores because of the government subsidy that you have received. So accounting standards will have these disclosure requirements in common. Every accounting standard will have some or the other disclosure requirements that you have to give. And that is compulsory. You have to disclose them, right? Because the end user should understand the same. Right? So I'll just put it over here. That is disclosing the material information for the better understanding
Of financial statements by the end users. Correct? So I want everybody to please note all these points down. And meanwhile, if anybody wants to raise a query, they can just raise your hand and I'll just clear your doubts. If anybody wants to raise a query, you can just raise your hand. I'll unmute you. Yes.
Good morning, sir.
Good morning, madam.
Sir, what is recognition criteria? Because of network issue, I was unable to listen, sir.
See, recognition criteria means whether a particular item should be recorded in the books of accounts or not. There are certain items which you come across while doing accounting. So the question arises whether this will be recognized as an asset or whether it should be expensed as in the P&L account. That is what you will be learning in the recognition criteria. So there will be certain conditions. If you fulfill this condition, congratulations, record it as an asset or else record it as an expenditure. Now, say for example, AS9 is also there, revenue recognition. The entire standard will teach you when to record or when to recognize the revenue in the books of accounts. So you will be learning the recognition criteria over there. Now, what is the recognition criteria? In simple terms, I'll say, sir, if you are certain about the collection from your customers, then you can record the sales. But if you are not certain about the collection from your customers, postpone the sales. This is the recognition criteria. So when you are making a sale to one of your customers and at the time of sale, you are uncertain whether you will receive the money or not, postpone the sales. Don't record the sales now. But the next question coming in your mind will be, sir, if I am not sure whether I'm going to collect the money or not, why will I make a sale? What if you're compelled to make a sale? Say, for example, your local politician comes to your shop and wants to buy certain goods. Right? So since he's a politician, you will not be in a position to ask him for money. Will you ask him? No, because you will be in a fear that if I ask him money, he may shut my shop. But you have to give him all the goods that he is demanding.
Yes or no? So in that case, at the point of sale, at the time of sale, are you certain whether the money will be collected or not? The answer is no. You should not record the sale. You should postpone it. And see, exactly that only happened. He bought all the goods and he left your shop without even asking you the bill and without even asking you what is the bill amount. He just left, took the goods, left away, entered in his Toyota Fortuner and left. So can I say at the time of sale, you are not certain whether the money will be collected or not. So AS9 revenue recognition says don't recognize the sale, postpone it. So sir, will that sale be recognized anytime soon? Sir, it will be recorded if the uncertainty turns to be certain. Means say after 4 or 5 days, the secretary of that politician comes to your place and says that, "Arey, that day my boss purchased certain goods. What is the value of those goods? We will make the payment." Now, can I say that uncertainty has become certain now? Because now he has agreed that he will make the payment. So, sir, now today, in this situation, you can record that sale which you had postponed. Because now it is certain, it is no more uncertain. So this is recognition criteria. So many of the accounting standards will be covering recognition criteria of various items. Correct? Anybody else? Any query? Fine. I think you have copied also. So let's move ahead. Now, before going ahead, whatever we learned here, this is a 5 marks question. In exam, they will ask you a theoretical question. What are the various areas? What are the various areas covered by accounting standards? 6 points you have to write in exam for 5 marks. So every AS will cover objective, scope, recognition criteria, valuation and measurement, presentation in the general purpose financial statements, and disclosures in the general purpose financial statements. So these are the 6 areas where each and every accounting standard is going to cover. Right? Question for 5 marks. So let us go back again. I hope you have already copied this down. Right. So again, I'm coming back over the introductory part. As I already told you, sir, our base standards were US gaps. And with the help of those US gaps, we created the Indian gap, which are called as accounting standards. But sir, now we are in a world where there is lots and lots of globalization. Now, you might have already seen that Tesla has also entered Indian market, but obviously it is not in our reach because the car Model 3 will be launching at around 90 lakh rupees. So for middle class people, Tesla is still a dream. But if we are in the US, then it cannot be a dream because the same car in the US is costing only 32 lakhs. Because my cousin in the US owns that same Tesla Model 3. She got it for 34 lakhs over there. But in India, it is how much? 90 lakh rupees because of the high custom duty or whatever it is. So because of this globalization, now there is again a need. Need for what? Sir, can I say United States might be doing accounting in some other way and we people are doing accounting in some other way. So if Tesla comes in India and Tesla wants to do accounting in India, can I say they would be comfortable if whatever accounting they are doing in India matches with the accounting done in the US Tesla? Because end of the day, Indian balance sheet is going to be merged with the US balance sheet. Because Indian balance sheet will be the subsidiary balance sheet and holding is US, right? So how to bridge that gap? Because our accounting in India and their accounting in the US will be different, somewhat different. So sir, in the global, or I would say in the foreign countries, there is something followed called as IFRS. What? IFRS, International Financial Reporting Standards, which is followed by many countries around the globe so that all their transactions are uniform. So comparability is possible, uniformity is maintained. So we Indians also thought, now it is time for us to adopt the foreign standards. So we first initially decided that we will adopt IFRS as it is, which will be applicable for the multinational companies and all, and our Indian companies also. So that our accounting and the global accounting will match with one another. But sir, again, we are Indians. We cannot directly adopt IFRS as it is. So what did we people do? Sir, we took IFRS and we took our existing accounting standards, merged both of them, and came up with something new called as Ind AS, Indian Accounting Standards, which are nothing but in line with your global standards. And this Ind AS syllabus we will be covering in your CA final level. So hopefully next year when we meet in final, we will be learning Ind AS over there. Right? So Ind AS part is not covered in your CA inter syllabus. So we will not be discussing about Ind AS, anything about Ind AS now. So only this is the last time I'm saying the Indian gaps which were already there, that is your accounting standards and your IFRS. We have already merged them, or we have taken the points from both of them and come out with our Indian accounting standards, Ind AS. Somebody asked me what is the full form of IFRS. I'll repeat. IFRS full form is International Financial Reporting Standards. IFRS, International Financial Reporting Standards. Right? So, Ind AS is already brought in India from the year 2016 itself. Though at that time it was not mandatory, it was optional, but from 1st April 2017 it became mandatory to many enterprises, and from 1st April 2019 it has become mandatory for banks, insurance companies, financial institutions also, right? And for others there is a criteria. If the turnover of the company is somewhat greater than 250 crores, then it is applicable. So Ind AS as of now will not be discussing anything about it. Right? In our accounting standards, you can see something I have written: first gen accounting standard, second generation. Gen is generation. Your first generation accounting standards are not in line with IFRS, or I would say Ind AS, because they have not been modified yet. But your second generation accounting standards are exactly in line with IFRS. Some examples of second generation accounting standards which are in line with IFRS are AS2, AS4, AS10, AS26, AS29, and AS20. So these are all, I would say, the updated accounting standards. And I would also say that if you learn the accounting standard of these numbers, AS2, 4, 10, it is same as your Ind AS also. So when you will be learning Ind AS, you will see that this is exactly same as your AS, because they are updated ones. Right? But this has got nothing to do with your syllabus. Obviously, this was just an extra knowledge that I gave you. We have first gen and second gen accounting standards. Second generation accounting standards are exactly in line as per your Ind AS, or I would say IFRS. Correct? So here we complete with the first part of the introduction, that is water accounting standard, how it came to India, why are we using accounting standard. So why ka answer is what? Uniformity, comparability, and disclosures. So why are we using accounting standards? Sir, we are using accounting standards for uniformity. Since there is uniformity, there is comparability. And third important point, sir, we require disclosures. Very important, sir. Without disclosures, we cannot understand financial statement. I'll give you an example for that. Now, I am a chartered accountant. Even if you don't disclose, I am technically qualified to understand what you have done in your financial statements. Yes or no? But my father, he's a qualified engineer, right? He's a structural engineer. And if I give him a balance sheet, Papa, take the balance sheet, now you understand by your own. Will he be able to understand? The answer is, sir, many points, bouncer, huge bouncer. And he will not be in a position to duck also. But I give him something called as notes to accounts, where lots of disclosures are given. And I tell him, Papa, wherever you have a query, go and check the disclosure. There will be something written for it. Now say depreciation is charged 100 rupees. So I'll be having a disclosure for it. In the current year, depreciation is charged as per 10% SLM or WDV method. So my Papa will come to know, Acha, this is how you calculate depreciation. Are you getting this point? So to understand the financial statements better, you require disclosures. Because when I talk about Companies Act doesn't give so many disclosures. Companies Act is just given you the Schedule 3. This is how you make the balance sheet. This is how you make the P&L. This is how you make the notes to accounts. But what should come in the notes to accounts? Companies Act, I have got nothing to do with that. So Companies Act never says you want so many disclosures. But AS will tell you, you have to give the disclosures to make the end user clear about your financial statements. Correct? Any query till here? Because after this, we have to start with the most important point, that is applicability of AS. And from this applicability, 5 marks, 2 questions can be raised. So any query till here? Any query till here? You can just raise your hand. No query, no query. Okay. So I have still 5 minutes to go for the break. Before the break, 1 or 2 points I'll discuss, and then we'll go for the break, and then we will discuss the lengthy table. See, every question in accounting standards will have a weightage of 5 marks. Right? Only the question number 6 that I told, in that you might get it for 4 marks. But maximum the weightage of every question in AS will be 5 marks only. So whether it is a very small question or it's a huge question, it is only 5 marks. So you should be lucky enough in exam that small questions come for 5 marks, because there are certain solutions which are huge. And that also you have to do it for 5 marks only. Correct? Now, before going for the break, you have a 10 minutes break in between. Before going for the break, applicability of AS. Now, sir, many people before this lecture had a myth that AS is applicable only to companies. Sir, only companies. Individuals like me, proprietors or partnership firms or LLPs, sir, AS is not applicable to them. The answer is no. Because if you remember, around half an hour back, I told that accounting standards are required for the preparation of GPFS. Means if you want to prepare financial statements, accounting standards are must. So my next question to you is, I am a proprietor. I am a proprietary concern. Do I make my financial statements? The answer is yes. Yes, sir, I make financial statements. So shall I apply AS for making financial statements? The answer is definitely yes. Because if you are making financial statements, you have to follow AS. So whether you are a proprietor, whether you are a partnership firm, whether you are LLP, right? Whether you are a private limited company, whether you are a listed company, whether you are a foreign company doing business in India, AS is applicable to you. Why? Because you will be making financial statements in India. Correct or not? So irrespective of your legal form, AS is applicable to you. That is point number 1. Point number 2, irrespective whether you are profitable or a non-profitable organization, AS is applicable to you. So, sir, it is applicable on the NPOs also, non-profit organizations. The answer is yes. But if those NPOs are doing any commercial transactions, then only AS is applicable. But if they are doing purely charitable transactions, means nothing commercial, sir, purely charitable, no commercial transaction, then no need to follow accounting standards. You are exempted from following accounting standards. So I will repeat my point once again before going for the break. Sir, AS is applicable to all enterprises irrespective of their legal form. So whether you are a proprietor, whether you are a partner, whether you are a LLP, whether you are company, private limited, public limited, blah, 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 AS is applicable to you. AS is applicable irrespective whether you are profitable or non-profitable, AS is applicable. But sir, for non-profitables, one point you remember, if they are not doing any commercial activity, they are doing just charitable activities, then only the AS will be exempted for them. But sir, it's an NPO, but doing all sorts of commercial activity. Now, what is commercial activity? I'll come back. After the break, I'll come back to it. But for the time being, if they are doing only charitable activity, then only they need not follow AS. But if they are doing commercial activity, then congratulations, AS are applicable to you. Right? So I hope this point is clear till here. So after the break, we have to understand this huge table which is shown in front of your screen. Right? Very, very important, because from this table only 2 questions of 5 marks will be raised. Correct? So it's exactly 8:30 now. So we'll go for the break and we will start again at 8:40. Fine? See you after the break.
Yes. There's a power cut at my place. Yeah. What do you think? Will all the AS be applicable, or ICAI will say that, boss, no, since you are small enterprise, you will be given some or the other relaxations. Somebody says an answer that no, sir, no relaxations will be given to you. You have to follow all the accounting standards. Will not be given any relaxations. All you have to follow all AS. Anybody else? Sir, no users, no investments. Huh? Yes, sir. No users, no investments. No, please raise your hand. You can just answer. No problem. Only for NPO there will be some relaxations. Okay. But not for the others. For others, everything has to be followed. Or some people say, no, sir, for companies, all AS will be applicable. And for other enterprises, some or the other AS will be exempted. Will it be like that? Acha, it depends. Okay. So now please understand one thing. Please understand one thing. Your accounting standards, or I would say ICAI, has given certain relaxations depending upon the size and nature of the enterprise. Oh, super. The electricity has come back again. So ICAI has given certain relaxations depending upon your type of organization and depending upon the size of your organization. So to understand, first, please have a look at the chart that I have made over here. And once you understand this chart, and then I will go for the conditions, right? What the chart says. Sir, what we have to do is we have to divide our various enterprises into 2 parts: corporate enterprise and non-corporate enterprise. Corporate means companies, non-corporate means other than companies. So in non-corporates, we will have partnerships, proprietors, LLPs, trusts, cooperative society, etc. But when I talk about corporate, we will be having purely companies, whether they are listed or unlisted, that is a different story. Now, sir, what these people have done, they say that corporates we will further divide into SMC and non-SMC. Sir, SMC means small and medium companies, and non-SMC means large companies. Non-SMC means large companies. Right now, who will be called as a large company? Who will be called as a small company? We have the criteria, we have the conditions. I will discuss it later. Correct? But as of now, you just understand there is a large company and there is a small company. For example, Reliance Industries Limited is a large company, right? But on the other hand, we have XYZ Private Limited, small company, correct? Now, if you are a large company, ICAI says that apply all the accounting standard, means boss, all the 27 AS are applicable to you. If you are a large company, no relaxations, everything is applicable. But on the other hand, you are a smaller company, small company. Sir, I am small and medium company, SMC. For me, AS17 and AS3 are completely exempted. Cash flow statements are exempted, right? And segment reporting AS17 are exempted. Both are exempted for me, right? But on the other hand, if I am a non-corporate entity, non-corporate entities are divided as level 1 entity, level 2 entity, and level 3 entity. Level 1 are called as non-SME, SME is non small and medium enterprises, means we are talking about large enterprises. We are talking about large partnership firms. We are talking about large trust. We are talking about large LLPs, right? Now, for them also, all the accounting standards are applicable, but those accounting standards which are specifically made for companies will not be applied. Say, for example, AS 21, consolidations, AS 23, investment in associates, AS 27, joint ventures are not applicable to them because they are specifically what? Corporate related accounting standards. So apart from them, all AS are applicable. Correct? So please understand, for non-corporate entities, total non-corporate entities, the AS which are specifically made for companies are not applicable. 21, 23, 27, not applicable to them, because consolidations are not possible for partnerships. Associates, investment in associates, investments in joint ventures are not applicable. So these three AS are excluded. But on the other hand, if you are a level 2 entity, sir, same cash flow statements, AS 17 are again not applicable to you, right? And if you are level 3 is the, I can also say level 3 means that micro, small and medium enterprises. They are not specifically told micro, but I am saying micro means they are smaller than the small and medium enterprises. So level 3 enterprise are the smallest. Example, I am level 3 entity. For me, AS3, AS 17, 21, 23 are exempted, but apart from that, there are many other accounting standards whose certain part are not applicable to me. Right? So you need not by heart that what is not applicable, that because they will not ask you a question. If you are a level 3, list the paragraphs of the various AS which are not applicable. That is not a practical possible question, because you cannot by heart all those things, right? But now the next important point arises. Sir, how will I come to know whether I am falling under level 1, level 2 or level 3? Sir, please understand, the criteria to become a large company or the criteria to become a large non-corporate are exactly the same. So to say that you are a non-SMC or to say that you are a non-SME, the criteria are exactly same. So I will not teach the criteria of these 2 points separately. Rather, I will teach to you in a one single way. And from now onwards, I will call this non-SMC as not SMC. I will call them as SME. So my level 1 entities will include from now onwards, for understanding purpose, my level 1 will have corporates as well as non-corporates. Because level 1 means all the large enterprises, and enterprise is a wider concept and company is a narrow concept. So now I am cutting this C, and against this C I am putting the word E, non-SME level 1 enterprises, because conditions are same. So no need to by heart separate conditions for this. No need to by heart separate conditions for this. You have the same conditions. So now onwards, we will call level 1 enterprise. Level 1 enterprise means all the large companies, all the large non-companies. All the large companies, all the large non-companies will be what? Level 1. Correct? Then, sir, the conditions for small and medium companies and conditions for small and medium enterprises level 2 are same. Same conditions, sir. So, sir, why to learn this and this separately? So what we'll do, we will learn these two together because the criteria are same. So from now onwards, I will not call them SMC. Rather, I would say level 2 SMEs. Level 2 SMEs means small and medium enterprises, means it will cover small and medium companies also, and it will cover small and medium non-companies also. Right? So level 1, large companies and large non-corporates. Level 2, small and medium companies, small and medium non-companies. That is why I'm using the word enterprise, because enterprise will cover everybody. Company will cover only company, but enterprise will cover company, firm, LLP, everybody. Right? And leave SME apart, because small and medium enterprises are generally only non-corporates. People like proprietors fall over here, and certain small partnership firms will always fall here. So the criteria for this is actually not specifically given, because in simple term, if you are not level 1, then check level 2. But if you are not level 1 and if you are not level 2, then automatically you will be what? Level 3. So when I teach you level 1 and level 2 criteria, automatically you will only give me the answer like what is level 3. Is this point understandable? Or is there a query over here? If yes, raise your hand. Are you understanding the corporates and the level 1 entity? Corporate is company, non-corporate is non-company, right? But we will from now onwards take everything as level 1, level 2 and level 3. Level 1 means large enterprises. Now when I use the word enterprise, enterprise will cover corporate, non-corporate both, right? Level 1 will cover corporate, non-corporate both, but large ones. Level 2, small and medium enterprises. Because criteria are same, so I will not bifurcate when I'm giving the conditions. That is why I've shown a bifurcation here itself to make you people understand. Right? So please copy down this chart first, and then we will go in detail about what makes you level 1, what makes you level 2, and what makes you level 3, the conditions. So please first copy down this chart, and then I will take you there. Achha, before that, 1 minute, before copying, have you copied the applicability point? This paragraph, have you copied from here till here? Have you copied from applicability from here to here? Have you copied this? If not, please do it first. I'll give you 2 minutes to copy this. Then you copy the chart, and then we will go for the detailed conditions.
Okay. Now you go for the conditions. Now we'll learn in detail who will be taken as level 1 and who will be taken as level 2 and who will fall directly in level 3. Correct? So let us first discuss the conditions of level 1 enterprise. You can see there is a huge table that I have made over here. Right? You can zoom in your screens. Right? Or shall I zoom it here itself? Okay. Level 1 enterprise non-SME. There are total 5 conditions placed over here, and you have to fulfill any one of the 5 condition, to make yourself fall under level 1 enterprise. Level 1 means non-SMEs, means large companies or large other than companies. So what are the conditions? Sir, point number 1. My audio is not clear. Is my audio clear or not? Because one of them, see, now I am sitting exactly next to my Wi-Fi connection, and I think now I have a very good connection over here. Sometimes in between, that might be because if anybody is using the mobile hotspot, so if you are using a mobile hotspot, then sometimes you will have that problem. But if you are having a proper high-speed Wi-Fi and you're sitting nearby to that Wi-Fi, then there will be no voice issues. But if you are using a Geo hotspot, that 4G hotspot, then there is a chance that sometimes the voice may get lowered. Right? So I would recommend, if you are having a Wi-Fi connection at home, sit nearby to that Wi-Fi, or sit, if you are using a mobile connection, sit in your balcony, because there you will get the best speed possible. Right? So I'll start the point. Level 1 enterprise, point number 1, any one out of 5 conditions to be fulfilled. Sir, point number 1, any enterprise whose securities are listed on the stock exchange. I will repeat my point. Any enterprise whose securities are listed on the stock exchange, whether in India or outside India, whether in a recognized stock exchange or unrecognized stock exchange, will be level 1 entity. Plus any enterprise who is in the process of listing. So either you are already listed on the stock exchange or you are in a process of getting yourself listed on the stock exchange, whether in India or outside India, whether in a recognized stock exchange or unrecognized stock exchange. RAC is recognized stock exchange, URAC is unrecognized stock exchange. Right? So, point number 1. If you are already listed on the stock exchange, congratulations, you are always level 1 enterprise. Some people are in the process of listing. So when you are in the process of listing means you are now a private limited company and want to make yourself a public limited company, or you are in the form of LLP or a partnership firm who is now getting yourself listed in the form of a company in the stock exchange. Right? So whether in India or outside India, whether a registered stock exchange or unregistered, recognized stock exchange or unrecognized stock exchange. Recognized stock exchange in India is Bombay Stock Exchange and National Stock Exchange. Unrecognized are Lucknow Stock Exchange, you have the Kolkata Stock Exchange, you have the Madras Stock Exchange. These are all unrecognized stock exchanges. Right? So whether you are listed in recognized, unrecognized, whether in India, outside India, or whether you are in the process of listing, you are level 1 enterprise. So one point, you should be applying your common sense. If I am still a LLP, and not in a position of going into stock exchanges or something, point number 1 will not be applicable to me. So basically, point number 1 is applicable only for the companies which are either listed or in the process of listing. Correct? Is this point clear to you? I'll repeat this point once again. Any enterprise who is already listed or in the process of listing means now they are doing processing themselves. They are taking the SEBI permissions, right? They are taking permissions from Register of Companies. They are taking permission from central government for getting themselves listed on the stock exchange. So that is called as in the process of listing. Their securities. Securities can be what? Equity shares or preference shares or debentures on a recognized or unrecognized stock exchange. Maybe in India or maybe outside India. They will be taken as what? A level 1 enterprise. So my first question to you, Apple Inc. Can I say is recognized, is listed on the US stock exchange? Correct? But they are doing business in India also. So they have a Apple India Private Limited company also. Yes or no? So can I say Apple is already listed on the foreign stock exchange? So will Apple be treated as a level 1 enterprise or not? Yes, because it is listed in the foreign stock exchange. Google, Ford Motors, Oracle, Java, these are all listed in the foreign stock exchanges. Right? So they are all what? Level 1 enterprises for us. Sir, what about Reliance Industries Limited? Yes, sir, they are already listed on the stock exchange. It's a level 1 enterprise. Tata Group listed on the stock exchange, level 1 enterprise. JK Shah Education Private Limited. JK Shah Education Private Limited, is it listed on the stock exchange? Answer is no. Are they in the process of listing in the stock exchange? Sir, as of now, no. So will they fall under level 1? As per the first condition, the answer is no. Because first condition is not applicable, but there are certain other conditions which might make JK Shah Education as a level 1 enterprise. Right? Is the first condition clear to you? Right? Are you clear with the first condition? Going on to the second one. If you are a banking enterprise or you are doing the business of insurance, or you are a financial institution. If you are any one of these three, you are automatically level 1. And when I talk about banking, cooperative banks are also covered. When I talk about banking, cooperative banks also are covered, right? Because bankings can be a corporate bank or a non-corporate bank. Non-corporate bank means they are cooperative banks. So cooperative banks also. Can educational institutes be recorded in stock exchange? Yes, we had an educational institute. We have an education institute listed on the stock exchange. Z Education is there. Z Education, Z Learning. Then we had MT Educare also, which is listed on the stock exchange. Right? So there is no limitation like education institute cannot be listed on stock exchange. There is nothing like that. Because end of the day, education is also a business only. Right? So if you are a banking enterprise or an enterprise doing insurance business, or you are a financial institution, automatically you are level 1 enterprise, irrespective whether you are listed or not. So that is not important. If you are banking, insurance or financial institution, automatically you are level 1. Correct? So point number 1 and point number 2, I consider them as qualitative characteristics. I consider them as what? Qualitative characteristics, because somewhat it gives the quality of or the nature of your business. Means whether you're banking, whether you're insurance, whether you're a financial institution, whether you are a listed company or a non-listed company. Right? So these are qualitative characteristics. But from point number 3, we go for the quantitative characteristics. Is point number 1 and point number 2 clear? Any query with point number 1 and 2? Right? Now we go for point number 3. Listen point number 3 very, very carefully. Right? Because English is very important over here. Now there is a turnover criteria. Turnover criteria means quantitative characteristic. Turnover criteria, what they say? Excluding other income, or I would say that is non-operating income. So you will exclude all your non-operating incomes, or you will exclude your other incomes to calculate your turnover. Means you will consider only and only revenues or incomes from your operational activities. Now, I'll give you an example what is operational and what is non-operational. JK Shah Education Private Limited, for them, operational income is fees collected from you people or giving any service with respect to education, whether it be test series or whether it be lectures, whether it is online videos, whatever it is. That is operations for them. But JK Shah Education Private Limited will also have some fixed deposits in bank. They will have some properties given on rental basis. They might also have invested in equity shares of some companies fetching dividend. Yes or no? So this dividend income, this interest income, the rental incomes are all non-operative in nature. So when you calculate the turnover, non-operatings will be kept aside. You please consider purely and purely operational activities. Is this point clear to you? So what is the query or what is the point? If turnover is greater than 50 crores in the immediately preceding financial year, if the turnover is greater than 50 crores in the immediately preceding financial year, then congratulations, from this financial year, you are level 1 enterprise. You are what? Level 1 enterprise. So you have to check the turnover of last year. You have to check the turnover of last year to decide whether from this year onwards you are level 1 or not. Are you getting this point? See, I've put an example over here. Just have a look at this example. In the financial year 1920, your turnover was 52 crores. So in the current financial year 2021, which will start from April, in the current financial year 2021, you will be termed as level 1 enterprise. Why? Because the turnover of the preceding financial year was greater than 50 crores. Right? Are you able to understand this point? You have to check the turnover of last year to decide whether from the current year you will be level 1 or not. Correct? Point number 4. Point number 4 is with respect to borrowings, which is again important. Borrowings will include public deposits, all other long-term borrowings, as well as accrued interest. ACC interest is accrued interest. So we'll be having a detailed talk about accrued interest also. So we'll be considering all the long-term borrowings, public deposits that we have raised, plus the accrued interest on them for calculating your borrowings. Now what they say, borrowings greater than 10 crores at any time during the immediately preceding financial year. Now, what do you mean by this? At any time during the immediately preceding financial year. Immediately preceding means last year. But what do you mean by this? At any time during the year? Can anybody give an answer for this? You'll just raise your hand, I'll unmute you. What do you mean by the concept of any time during the year? Yes, sir.
Sir, even at for one day we have borrowed more than 10 crores and we have repaid it on the next day itself, means it will come under that criteria.
Exactly. Super. Even if we have borrowed greater than 10 crores for one single day and next day we have repaid certain part of it, still it will be taken as what? Greater than 10 crores. So there is no concept of closing balance should be greater than 10 crore. It means as on 31st March, your closing balance should be greater than 10 crores. No. At any point of time, even for one single day, your borrowing was exceeding 10 crore and the next day you repaid a certain part, bringing it less than 10 crore. You will still call it as what? Greater than 10 crore at any time during the year, and hence you will become what? A level 1 enterprise. So now please understand further. Sir, what do you mean by the concept of accrued interest? I'll tell you, there are two types of accrued. One is called as accrued and due, and other one is called as accrued but not due. Now, when I say accrued and due, means the due date is already passed and you have still not made the payment. The due date is passed, but you have still not made the payment. That is called as accrued as well as due, or accrued and due. But when I say accrued but not due means, sir, the expenditure has been accrued, but it is still not due for payment. I'll give an example for this. Say debenture interest is payable for the period Jan to June, right? And in between falls 31st March. So as on 31st March, January, February and March, 3 months interest, can I say has been accrued? Because since you are using the debentures, 3 months of interest has been accrued. But my point is, whether it is due, sir, no, as on 31st March, it is not due because it is payable on 30th June. So it will be due on 30th June. So as on 31st March, what I will say for that interest, I will say it is interest accrued, but not due. So I will record that interest in my books of accounts as an expenditure, but it is not yet due. Are you getting this? So for the purpose of point number 4, borrowing calculation, we will always exclude interest accrued but not due. But we will always consider interest accrued and due. See, I've written the point over here. Interest due should be considered as borrowing, but interest accrued but not due should be ignored for calculating the 10 crores criteria. Is this point clear to you? Are you clear about interest accrued and due and accrued but not due? Are you clear with these 2 points? I'll repeat in short. Accrued and due means the due date has already been passed, but you have not made the payment. The due date is already passed, but you have not made the payment. That is called as accrued and due. Means, say for example, interest on debenture was payable on 15th March, but you have still not paid it. So as on 31st March, it will be called as accrued and due. But if the debenture interest is payable on 30th of June. And you are recording as on 31st March interest for 3 months, that is January, February, and March. So I would call it as what? Interest accrued, because interest expense has been accrued, we have incurred, but it is not yet due. So for calculating my 10 crore, always remember interest accrued and due will be considered, but interest accrued but not due will not be considered. Right? Now please have a look at the example over here that I have written. Right? Please focus on this example over here. I have a long-term borrowing of 9 crores. Right? I have a long-term borrowing. LT means long-term. Long-term borrowings is 9 crores and interest accrued and due is 0.8 crores, means that is 80 lakh rupees, plus interest accrued and not due is 0.4 lakhs, 0.4 crores, that is 40 lakh rupees. Hence, my total borrowing at any time during the year is 10.2 crores. So now you will say, sir, congratulations, it has crossed 10 crores, it is greater than 10 crores. So you will fall under level 1 enterprise. Sir, but one point to be noted, we have considered interest accrued but not due here also. But as per the standard, should you cover this point? The answer is no. So technically, you will not consider this point. You will consider only long-term borrowing and the accrued interest. So your total borrowing is only 9.8 crores, which is not exceeding 10 crores. So you are not a level 1 enterprise. You are not a level 1 enterprise. Is this point clear? Is this point clear to you people? Right? So I'll quickly recap the 4 points. Please stay focused. All the 4 points together now. On your screens, all the 4 points together. Sir, an enterprise who has been already listed or is in the process of listing on a recognized or unrecognized stock exchange, whether in India or outside India, is level 1 enterprise. Sir, point number 2, whether you are a banking enterprise or doing an insurance business or a financial institution, you are level 1 enterprise. Sir, if you are an enterprise whose operational turnover, operating income turnover is greater than 50 crore in the immediately preceding financial year, means in the last year your turnover was greater than 50 crores. Congratulations, in the current year you become level 1 enterprise. And point number 4, sir, if your enterprise's borrowings are greater than 10 crores at any time during the preceding financial year, immediately preceding financial year, you become level 1 enterprise. And what is the definition of borrowings? Sir, definition of borrowing is long-term borrowings plus public deposits plus interest accrued and due. Interest accrued but not due will be excluded. Is this point clear? Right? Anybody having any query with first 4 points? I'm asking, sir, if the income of a small company has exceeded 50 crore in previous years, should it get itself listed so as to satisfy? See, you are not getting this, Revati, you are not getting this. It is not necessary that a company who is having a turnover exceeding 50 crore should get listed on the stock exchange to become level 1. No, boss, these are 4 independent conditions. You have to fulfill any one. So even if you are not listed, but you are having a turnover greater than 50 crores, still you are level 1. Right? See, there might be a listed company who is having a turnover less than 50 crore. So it doesn't mean that you are having a turnover less than 50 crore, you are not level 1. Condition is what? You are listed, you are level 1. If you are banking, you are level 1. If you are having a turnover greater than 50 crore, you are level 1. If you are having a borrowing greater than 10 crore, you are level 1. So these are all independent conditions. None of the condition is related to each other. Are you getting this point? You have to fulfill any one. There are some enterprises who might be fulfilling all the 4. Very good, no problem. See, in the beginning only I said 1 out of 5 conditions. 1 out of 5. Any one you have to fulfill. and none of the condition is related to another. Is this point clear, Ms. Revati? Sir, in the third point, is it operating or non-operating income? See, other income, here is the relation. Other income means non-operating. So non-operating income has to be excluded. Non-operating income has to be excluded. Correct? Okay. Now the last point. Somebody raised hand, if I'm not wrong. I'm sorry. Somebody had raised hand while I was explaining. If yes, please raise hand again. Nobody raised the hand. I thought somebody raised hand in between while I was explaining. If anybody, please raise your hand again. Okay, fine. The last point, fifth one. Now this is very important. Holding or subsidiary. Holding or subsidiary of an enterprise satisfying any of the above conditions. Holding or subsidiary of an enterprise satisfying any of the above conditions. Any of the above conditions means condition number 1, 2, 3, 4. Can anybody explain this paragraph? Just raise your hand. Can anybody explain this paragraph? Holding or subsidiary of an enterprise satisfying any of the above conditions. Can anybody explain me this point? Please raise your hand. Come on, interact. Because interaction will make the session more comfortable for both of us. Or it would be like I am only speaking for 3 hours and you are continuously listening. It should be an interactive session. Because we are not physically present with each other. So if it is not interaction, then it will be a boring session. You have to be interacting. Don't chat. Directly raise your hand. Because it will not be always possible for me to read the chat because then my focus gets diverted. Yes, sir.
Sir,
Naveen.
it means a holding company or a subsidiary company. If it follows any of the 4 conditions given above, it is said to be a large company, sir.
No, sir, not exactly correct.
No.
I think Vedavali is one student. I'm sorry if I'm pronouncing your name. Yeah. Please. Where are you, ma'am? Yes, Vedavali. Am I pronouncing your name properly?
Yes, sir.
Yeah, please, ma'am. You have given me a correct answer in the chat box. Can you please elaborate your answer over here?
Here, that is if one company, say an X Limited is a company which satisfies the above conditions, a company which is some other company which is in relation with X as a holding or subsidiary would also be considered as level 1.
Okay. So this madam says that if there is a company X Limited who has already made itself a level 1 enterprise by fulfilling any of the 4 conditions. So if X Limited has any holding or subsidiary, then the holding or subsidiary of that X Limited will also be treated as what? Level 1 enterprise. Am I correct, madam?
Yes, sir.
Exactly. I'll give one more example. Say A Limited, right? Say A Limited. Just spoke. Yeah, Anirudh has also raised the hand. Yeah, Anirudh. Yeah, please.
Sir, I was about to say the same thing, sir.
Somewhat same. Okay. So your answer is very much same to the earlier answer. Yes? Okay, fine. Oh,
Yes, sir.
you can keep yourself muted. Sorry. You can mute yourself. Yeah. A Limited is a level 1 enterprise. A Limited is a level 1 enterprise because it has fulfilled any one out of the 4 conditions given to you. Right? So when A Limited will have 2 subsidiaries, S1 and S2, the subsidiaries of A Limited will also be taken as what? The subsidiary of A Limited will also be taken as what? Level 1 enterprise. right? So A Limited is the holding company and he is already level 1 enterprise. So it will have the subsidiaries below it. All those subsidiaries will be taken as what? A level 1 enterprise, right? So I will put the name of these companies in my paragraph above so you will understand this. Holding or subsidiary. Can I say S1 and S2? S1 and S2 are subsidiaries of the enterprise A Limited. Correct? I'll read the paragraph again. Subsidiary S1 and S2 of the enterprise A Limited satisfying any of the above conditions will be level 1. So who should satisfy the condition? Sir, the enterprise. Who is the enterprise? Sir, A Limited. So A Limited being a level 1 enterprise, its all subsidiaries S1, S2, S3, S4, whosoever it is, will automatically treated as what? A level 1 enterprise. But sir, here a point is written, co-subsidiaries are excluded. Co-subsidiaries are excluded. Now, what is this co-subsidiaries point? Please understand this co-subsidiary point with the help of another example. But before that, are you understanding point number 5? See, I call point number 5 as karma point. Karma. Why karma? Because of one company's becoming level 1. Because of that company, the other companies below its line will also become level 1 enterprise. So if A Limited is the holding company, so yes, subsidiary of a subsidiary. I will be talking about the co-subsidiaries later. Keep the co-subsidiaries point apart, right? Please understand this. Please understand this. If the holding company is a level 1 enterprise, all its subsidiary belows will also become a level 1 enterprise, right? But if a subsidiary is level 1, if a subsidiary is level 1, so because of that subsidiary, the holding will become level 1. But the other fellow subsidiaries will not become level 1. Are you understanding this point? Try to understand with this example. Try to understand this example. We have A Limited, the holding company. And we have 1, 2, 3, 4. S1, S2, S3, S4. 4 subsidiaries. A bit hypothetical example. Bit hypothetical because in real life such example is not applicable. Means it will not come. But to make you people understand, I'm making this example. Sir, S1 is level 1. Is level 1 because of point 1 to 4, right? So level S1 has fulfilled any one of the 4 conditions and it has become level 1, correct? Because of S1, can I say A Limited is the holding of S1? So A Limited will also become level 1 by point number 5. Are you understanding till here? A Limited has become a level 1 entity by the virtue of point number 5. Not by the virtue of point number 1, 2, 3, 4, but by the virtue of point number 5. A bit hypothetical because your subsidiary is a bigger than holding company. So that is not practically possible. That is why I told it is hypothetical. Just understand. Now, because of S1, only A Limited can become level 1 entity. Your S2, S3 and S4 not level 1. They will not become level 1. They will not become level 1. Because the conditions of S1 becoming level 1 will be applicable only to its holding, but not to its fellow subsidiaries. But not to its fellow subsidiaries. Or some people call fellow subsidiaries as co-subsidiaries also. But technically co-subsidiaries are what? Subsidiaries, subsidiary. subsidiary is called as a co-subsidiary. Means S1 is further having a subsidiary called as X1. That is called as what? A co-subsidiary. Right? So please understand this very carefully. If S1 is level 1, then only A Limited above will become level 1. Its other fellow subsidiaries will not become level 1. Right? But you will say, sir, other subsidiaries can also become level 1 because now the holding has become level 1. Right? You may think in that angle also. No? Sir, now my holding has become level 1. So my all other subsidiaries will also become level 1. The answer is no. Sir, why? Arey boss, your holding has become level 1 not by the virtue of point 1, 2, 3, 4, but by the virtue of point number 5. And if you have read the point number 5 carefully, what it has given, holding or subsidiary of the enterprise, who has become level 1 because of any of the 4 conditions. Right? I will repeat this point again. This is a bit confusing point. Stay focused clearly. If S1 becomes level 1 because of point number 1, 2, 3, 4, only the holding will become level 1. The other subsidiaries will not be level 1 because they are fellow subsidiaries and fellow subsidiaries will not be covered. Right? Only the holding will become level 1. Now some people will raise a query, sir, my holding is now level 1. So by the virtue of the holding, the other subsidiaries S2, S3, S4 should also become level 1. The answer is no. Why? Sir, because the holding has become the level 1, not because of point number 1, 2, 3, 4, but because of point number 5. That is why these 3 companies S2, S3, S4 are not level 1. Right? Now one more point coming over here. Sir, this S1 has a further subsidiary X1. So will X1 be level 1? Please give me an answer for this. Will X1 be level 1? Yes or no? Many of them are answering yes. The answer is yes. Why? Because what X1 will say, my holding is level 1. My holding is level 1 because of point number 1, 2, 3, 4. Because of point number 1, 2, 3, 4, then your holding is also L1. Correct? But if this same example I am putting in the earlier one, means in this case, just have a look over in this case, if my S1 has a further subsidiary X1, then what will be your answer? Will X1 be level 1? Yes or no? The answer is no, because co-subsidiaries are excluded. Right? So X1 will not be level 1. X1 will not be level 1. Are you able to understand this point? Are you able to understand this point? Anybody having a query with point number 5, you can raise your hand. Before that, I'll conclude point number 5. Everybody be careful. Sir, if one particular enterprise is level 1 because of point number 1, 2, 3, 4, then that enterprise, if is having any holding or subsidiary, then that holding or subsidiary of that enterprise will automatically become level 1. Right? Means, for example, if my holding is level 1, all its subsidiary below will be level 1. Right? But if that subsidiary is further having a co-subsidiary, means for A Limited, X1 is a co-subsidiary. The co-subsidiaries are excluded. So X1 will not be a level 1 enterprise over here. Correct? Take the second example. Sir, if an enterprise is level 1 and it is a subsidiary and it has a further holding. So because of the enterprise, its holding will become level 1. But the fellow subsidiaries that it has will not become level 1. Right? And if that subsidiary who has become level 1 has a further subsidiary, then that subsidiary now will become what? Level 1. So this is my conclusion. If anybody wants to further raise a query, you can please go on. Yes, madam.
Sir, if the holding company A Limited is level 1, then what about
Correct.
X? Will that be also come under level 1?
No, madam, it is co-subsidiary. Na?
Okay, sir. So it will not.
Co-subsidiaries are excluded,
Okay, sir.
right? So A Limited having a single downline, that will be level 1. But if that downline further has a downline, they will not be level 1. Yeah, further, anybody having a query, please raise your hand. Others, please don't feel shy for raising your hands. No problem at all. Because clearing your doubt is the topmost priority. Yes, Lakshay.
Yes, sir. So, sir, let's say there are three companies. We have Reliance Industries holding Geo Platforms and Geo Platforms holding, let's say, Network 18. So, Reliance, then Geo Platforms, and then Network 18. So, sir, if Network 18 is a level 1 company by following 1 to 4, so Geo Platforms will also be level 1. And sir, like suppose even if like a Geo Platform follows or is qualified the conditions from point 1 to 4, so Reliance will also be.
Yes, Reliance will also become.
Great, thank you so much.
But sir, your answer should be in the opposite form because Reliance over here is already level 1. So automatically Geo will become level 1.
Yes, sir.
But Geo is also fulfilling all the conditions to become level 1.
Okay, sir.
So that Network 18 will automatically be level 1.
Okay, okay, sir. Got
and
it.
I think in your example, all these three are level 1 by following 1 to 4 because Network 18 will also have that turnover of greater than 50 crore.
Yes.
Geo also and Reliance also.
Yeah, true. Right.
Reliance will have a daily turnover of greater than 50 crore.
True. Yes. Sir.
Obviously.
Thank you, sir. Thanks.
Yeah, you're correct. You're absolutely correct. Yes. Anybody else? Anybody else? Anybody else? Okay, somebody's messages are getting. We understood this. So, shall I move further? Shall I end with level 1 enterprise? Yes. Shall I go ahead for level 2? Okay. Okay. So, sir, level 2 enterprise is smaller. Smaller as in we have only 3 conditions. Sir, why 3 conditions? Sir, conditions of level 1, that is point number 1 and point number 2 will not come in level 2. Sir, why? Sir, because if you are listed, then you are never coming into level 1. You are always into level 1 only. So in level 2, that point will not come. And if you are doing the business of banking or insurance or financial institution, right? Then also you are in level 1. So then definitely you are not going to come in level 2. So that is why when we are learning the conditions of level 2, point number 1 of level 1 and point number 2 of level 1 will not come. So directly we will have 3 points and those 3 points are coming from level 1 only. That is point number 3, point number 4 and point number 5. Please understand. Sir, to become level 1, you should have a turnover greater than 50 crores, correct? So sir, what will be now level 2 criteria? So level 2 criteria is your turnover is greater than 1 crore. Your turnover is greater than 1 crore, but less than or equal to 50 crores in the immediately preceding financial year. So turnover greater than 1 crore, but less than or equal to 50 crores, you will be level 1 and you will be level 2 enterprise. You will be falling in level 2 enterprise. Because if you are having a turnover greater than 50 crore, you are level 1. Right? So to be under level 2, what you have to do is, sir, your turnover and turnover logic remains the same, only operational turnover. Right? Your operational turnover should be greater than 1 crore, but less than or equal to 50 crores. Sir, 50 crores limit is given by the ASB Accounting Standard Board, but sir, this 1 crore of limit is given by the section 44 AB of the Income Tax Act. Means that is your audit section. If you are aware that if an enterprise has a turnover greater than 1 crore, they should do tax audit as per the income tax rules. So if anybody is a direct entry student, they might be aware about tax audits. But if you are a fresh student from CA Foundation, you will be learning this section 44AB in your income tax PGBP chapter. So I'll give you in short. If you're having a turnover greater than 1 crore, you have to get your books of accounts audited as per the Income Tax Act. So if this turnover limit of 1 crore is changing tomorrow, so while learning AS or while teaching AS also, I will change this. Now say in your Finance Act 2021, the budget which is going to come now, the limit is increased from 1 crore to 2 crore for audit. So next year when I will be teaching November 22 batch, I will not take this at 1 crore, I'll take it as what? 2 crore. Right? So this 1 crore ka limit is as per Income Tax Act. But 50 crore is standard as per the ASB accounting standard mode itself. Correct? This is point number 1. Same, immediately preceding last year only you have to check. Then comes the borrowings point. Sir, borrowings also same logic, accrued interest, interest accrued but not due, all logics remaining the same, only figures will change. Correct? So what is the figure for borrowing? Sir, your borrowing should be greater than 1 crore. Borrowing should be greater than 1 crore but less than or equal to 10 crore at any time during the immediately preceding financial year. Right? So you are having a borrowing greater than 1 crore. It should be greater than 1 crore, but less than or equal to 10 crore at any time during the immediately preceding financial year. Same, long-term deposits, long-term loans, public deposits, interest accrued and due, all points remaining the same. Right? Point number 2. And point number 3, the same, holding or subsidiary of an enterprise fulfilling any of the above condition. So same that holding subsidiary, what we learned, the same logic applies here. Post subsidiaries excluded, fellow excluded, everything remaining the same. Right? So level 2 is very simple. Only 3 conditions. Condition number 1. Sir, your turnover should be greater than 1 crore, but less than or equal to 50 crores in the immediately preceding financial year. Point number 1. Point number 2, your borrowings should be greater than 1 crore, but less than or equal to 10 crore at any time during the immediately preceding financial year. Or point number 3, you are the holding or subsidiary of such an enterprise who has already fulfilled the above conditions. Congratulations, you are level 2 enterprise. Right? So, who will give me the answer for level 3 now? Because for level 3, I have written other than level 1 and level 2. They will not ask you in exam what are the conditions of level 3. They will ask you what are the conditions of becoming level 1 for 5 marks, or they will ask you a question, what are the conditions to become level 2 for 5 marks. These are the 2 questions which might come from here. So if they are asking conditions for level 1, you write all the 5 conditions. If they are asking conditions for becoming level 2 enterprise, you have to write these 3 conditions. So can anybody tell me what are the conditions for level 3? It will not be asked in exam, but somebody is written in the chat, operating income is less than 1 crore, superb. Turnover less than 1 crore, borrowing less than 1 crore, superb. Perfect answer. Means you are an enterprise whose turnover is less than or equal to 1 crore. I'll be more perfect, less than or equal to 1 crore. Or your borrowings during the last financial year at any point of time is less than or equal to 1 crore. You will be what? A level 3 enterprise. Is this point clear to you? Right? So any doubt between level 2 and level 3? Or rather, I would say all the 3, level 1, level 2, level 3. Any query over here? Please raise up your hand and ask your query, if any.
Sir,
Yes,
in
Naveen.
that level
Yes.
2, sir, borrowings, it must be greater than 1 crore. Even that is specified by the Income Tax Act, sir.
No. That 1 crore limit is not given by Income Tax Act. No.
So
It
that
as
is
per
fixed,
age.
sir.
That is fixed. That is fixed.
Okay, sir.
That will not
Okay.
change. That will change only if the standards board changes it.
Okay, sir. Thank you.
Right? Yes, Nikhil.
Sir, these level 1, level 2, level 3 splitting up, are they according to law or specifically for the AS?
No, they are as per the accounting standards. Because this level 1, level 2, and level 3 bifurcation is given by AS. That is, ICA has given this bifurcation.
Oh, so it's according to the ASB, sir. Accounting Standards Board. Oh, okay. Fine. Thank you, sir.
Right. Yeah, welcome. Now, somebody has told that please explain level 1 holding subsidiary network issue. Madam, sir or madam that I don't know the name, I am not getting the name over here. 10:15 to 10:45 doubt solving session. I will explain it there in detail. Right? I think it is Muthu Parmeshwaram. Sorry, I'm really sorry, Muthu Parmeshwari. Please, 10:15 to 10:45 doubt solving session, you be present and ask your query over there. See, level 3 is very simple. Level 3 is very simple. Level 3 means turnover is less than or equal to 1 crore during the last financial year, and borrowing less than or equal to 1 crore in the at any point of time in the immediately preceding financial year. Then you become level 3 enterprise. Correct? Now, my question to you, please answer this. Now we are moving on to the last part of the standard now. My question to you is, sir, if a particular enterprise was there in level 1, if a particular enterprise was there in level 1, but now because of conditions not getting fulfilled from this accounting year, means say for example till financial year 1920 it was level 1. But in financial year 2021, when we check the level 1 criteria, it is not following level 1 criteria. It is not fulfilling it. But it is fulfilling level 2 criteria. So technically in the financial year 2021, when we were doing accountancy, so we were of the opinion that now we are actually level 2 enterprise. So what do you think? Can the exemptions be granted now? Or they will say, no, sir, you were already level 1. So you are a large company and now because of some reason you are not fulfilling the condition and now you are becoming small company. So we will give you exemptions. Or they will not be getting exemption. What is your answer? Means we'll make it more simpler. One company was being level 1 because of the turnover criteria. Correct? And now when we checked in the current year, the turnover of last year was less than 50 crores. So automatically for this year, it is becoming level 2. Right? So my question is, now earlier till the last year, they were level 1 and now they are to level 2. Will they be given exemptions? Somebody saying we'll get the exemption and somebody says that, sir, we will come to know at the end of the year. No, it is not like that. For financial year 2021, the turnover of 1920 is already available, boss, at the beginning of the year only. So you can clearly decide in the year 2021 whether you are level 1 or level 2. Somebody says they will be given exemptions from next year. Reasons for reduced turnover will be analyzed and then the decision will be taken to exemption given or not. Sir, all answers apart, a very simple answer for this. ASB or ICAI says that if you are level 1 and now you are falling under level 2, right? No exemptions will be given to you. You have to fulfill, you have to follow all the accounting standards as per AS1 only. I'm really sorry, as per level 1 only. You will not be treated as a level 2 entity. Even if you are following the conditions, since you are level 1, you have to be remaining level 1. Right? No exemptions granted. But ICAI also has a soft corner. ICAI says that for straight continue 2 years, you remain level 2. And again in the third year also, you are still continuing to be level 3. Then please take exemptions from the third year. Please take exemptions from the third year. Means I'll put up an example over here. Financial year 2021, we have become level 2. Right? But till 1920, we were level 1. Correct? So in financial year 2021, even if you are level 2, no exemptions. No exemptions. Financial year 21-22, again you have been declared as level 2. But still ICAI says, no exemptions. Follow all the AS. But sir, now in financial year 22-23, still level 3. Oh, sorry, still level 2. Now ICAI is of soft corner. Now ICAI says that continue from the last 2 years and now also in the third year, you are becoming level 2, right? So from this year, you will be getting exemptions of level 2. Exemption means what? If you are a company, no need to make cash flow statement, no need to make segment reporting. And if you are a non-company, then AS3, AS17, AS21 and all are not applicable. See, even if a corporate is for fulfilling level 3 conditions, still corporate will be taken as level 2 only. Because in corporates, we don't have that third level. Third level is purely non-corporates only. Because corporates will have either large company or SMC. They will not have the third level. For corporates, they will have only level 1 and level 2. Level 3 is specifically for non-corporates. People like you and me. In the, proprietors, basically. Right? But now what happens? In financial year 23-24, they have fulfilled certain conditions to become level 1. Then what do you think? Will they get exemptions? No. So from 23-24, again follow all the years. Correct? Now, another example. If you are level 2 from so many years and now you become level 1. So when you are switching from level 2 to level 1, you have to follow all the AS from the day when you have switched to level 1. No exemptions will be granted. No, sir, let's check you fall in level 1 for 2 straight years or not. That condition is not applicable. So if you are level 2 or level 3 and now you fall under level 1, you have to apply all the AS from the year in which you become level 1. No exemptions will be granted. Is this point clear? Right? Anybody having a query over here? Shall I move ahead? Shall I move ahead? Right? Okay. Now, the last point of the introductory part before winding up. As I already told you that trusts are excluded. Somebody has raised a hand. Just a minute. Yes, Mr. Vansh.
Hello.
Yes,
sir.
Yes, you're audible.
So you told that suppose a company switches from level 1 to level 2, like if in the third year also they continue, then we'll consider it as a level 2. But suppose, sir, the subsidiary is still in the level 1, then like will they be shifted to level 2 or they still will be in the level 1?
Level 1.
Oh, okay, sir.
They will be still level 1 because their subsidiary is level 1, na? So because of the subsidiary, the holding will always be level 1 only.
No, sir, if the holding is shifting to level 2, so what about the subsidiaries?
Subsidiary is if the holding is shifting to level 2, then it is implied that the subsidiary will already be having a turnover less than the holding, obviously.
Yes, sir.
Right. So if the holding is shifting to level 2, the subsidiary will also shift to level 2. Right. But the holding is shifting to level 2, but the subsidiary is fulfilling any of the 4 conditions to be level 1. Then your holding will also be level 1 only. The holding cannot shift to level 2. That is a bit hypothetical, but yes, that is the truth. You have to follow. Correct?
Okay, thank you, sir.
Yeah. Now, as I already told you, trusts are excluded from the scope of AS by ICAI. Trusts are excluded. Trust means basically non-profit organizations are excluded from the scope of AS by ICAI. Means ICAI says trust, you please don't follow accounting standards. Right? But you will not follow accounting standard if you does not involve in any commercial transaction, even of a insignificant nature. Now, sir, what do you mean by a commercial transaction? Sir, a commercial transaction means such a transaction whose end result is either a profit or a loss. A commercial transaction is such a transaction whose end result is either a profit or a loss. Even if of an insignificant nature. Insignificant means even if you have entered into a commercial transaction, landing up making a loss or a profit of 5 rupees also, still it will be taken as a commercial transaction and your exemptions will be cancelled. I'll give you an example. Say there is a charitable organization who has organized a show for the differently abled person. Correct? But they organized the show for free of cost for the benefit of the differently abled people. But one mistake they did. Mistake was they gave water bottle of 10 rupees at 5 rupees only, and they gave 2 samosa. Everybody is aware about samosa, if I'm not wrong. It's a very famous snack. Samosa, 2 samosas cost 30 rupees, but they gave it for 5 rupees only. Right? So technically, 40 rupees worth of food items was given to those people for 10 rupees. Now, many will say, sir, this is charitable, sir. 40 rupees of item is given for 10 rupees. But I will say, sir, this is a commercial transaction. The end result is a loss of 30 rupees. So since you have done this commercial transaction, your exemptions will be cancelled. So, sir, what should have been done? Give it for free. Giving it for free is charitable. Charging for it is not charitable. That is profitable. That is a commercial transaction. Are you understanding the point? But another question arises, sir, but this charitable organization, they have given it for 10 rupees and collected 1 lakh rupees for the samosa and the water bottle. And that 1 lakh rupees is again applied by those people for the objectives of the trust only. Then will they get the exemption? Because they are again doing some charitable activity only. 1 lakh is collected and again applied for charities only. So will the exemption be still granted to them, or the exemption will be cancelled? The answer is it will still be cancelled. Why? Sir, you have done a charity, you have done a commercial transaction. Even if that proceeds of that commercial transaction are reapplied for the objectives of the trust, still your exemption remains cancelled. You will not get the exemption. So what they say, even if the proceeds from the commercial transactions applied for objectives of trust will not make the trust eligible for exemption from AS. So if you have done a commercial transaction, topic is over, no exemptions. Even if you use it for the objectives of the trust, no exemptions. Is this point clear? And the same logic will also apply for the cooperative societies. So I'll just link it over here. Same for cooperative societies, your cooperative housing societies or cooperative societies, any kind of a cooperative society, the same logic. If they are doing commercial activity, no exemptions. But if they are not doing commercial activity, then all the AS are exempted for them. Is this point clear to you? Right? Anybody a problem with this point? Can immediately raise a query. If not, last point for this introduction, advantages and disadvantages of accounting standard. A direct question has already come in exam on this for 5 marks. Like, what are the advantages or disadvantages of accounting standards? Now, let us discuss advantages. I have already discussed them, but not specifically as an advantage or disadvantage, right? What are this point? Standard reduces to a reasonable extent or eliminate confusion in accounting treatment. Obviously, sir, because complex treatments are covered under AS only. Complex treatments are covered under AS only. So there will be no confusions henceforth because AS are there. So if, for example, you have to do accounting for lease transaction, leases, and you are confused, don't get confused because it's an advantage. What? AS 19 has been made. So refer AS 19, you will get all your confusions cleared over there. Second point, there are certain areas where important information are not required by law to be disclosed, but standard may call for disclosure. I've already said this point. Companies Act doesn't compel you to disclose many things, but AS compels you to disclose, and this is an advantage because when you disclose material information, automatically the understanding of the end user is increased. So that is one advantage. Point number 3. It facilitates comparison of the financial statements of different companies or enterprises at different places. So this comparability clause has been already discussed. Because of the AS, uniformity comes, and because of uniformity, comparison is very much possible. And generally the comparisons are made. Generally the power cut. Yeah. Generally the comparisons are made for by the investors to make them understand where to invest and where not to invest. And as an enterprise also, when I compare myself with other enterprises, I come to know whether I'm underperforming or I'm overperforming. Right? So these are the 3 advantages. What are the disadvantages? First disadvantage, it is rigid and does not allow flexibility in applying standard. Yes, sir, rigidity is one of the disadvantage, because if a particular AS is giving you a treatment, even if you feel that you have a simpler treatment, but still you cannot follow that because AS is rigid. AS says whatever I am telling you, you please follow that. So even if for a transaction you are having a easier way of doing the accounting, you cannot do it because AS is rigid. In any of the AS, it is not written that if you have a simpler way, you please follow that simpler way. No, they say that this is the AS, this is the method, you have to follow this. As simple as that. So that is rigidity point. Point number 2, the difference in AS are bound because of differences in traditions and legal systems from one country to another. So that is why to overcome this, we have come with Ind AS. Because our legal system, our way of doing transaction is different with that compared to the foreign countries. So to bridge this gap, we introduced what? Ind AS. Are you getting this? Point number 3, standards cannot override the law. This is very important. Standards can never ever override any act. Means I'll give you one simple example. AS 9 is for revenue recognition. AS 9 is for revenue recognition. But sir, there are certain revenues with respect to banking companies which has to be recognized as per the specific guidelines of RBI or the Banking Regulation Act. So if, for instance, a particular income is to be recorded as per the guidelines of RBI, then the bank need not follow accounting standard, because accounting standard cannot override the law. If the law says something to be done like this, you have to do it in that manner only, irrespective of whatever the AS says. Is this point clear to you? Again, I'll give you an example. Insurance, IRDAI, you might have heard about this, Insurance Regulatory Development Authority India. So the insurance companies has to follow IRDAI for many of their accounting treatments. So it is not compulsory for them to follow AS because AS cannot override the law. So insurance company will follow what? The law, right? They don't need to follow the AS at that particular time because AS cannot override your law. And last point, the choice between alternate accounting treatment in a particular situation is eliminated. Choices are eliminated means if sir one accounting standard says something for a particular treatment, the other accounting standard automatically will remain silent. Sir, why will the other be remain silent? Because it is not allowed to speak because of the point number 4. Choice between alternative treatment is not available. So if AS10 is giving treatment for a particular fixed asset, then again some another AS will not talk about the same fixed asset in a different manner because already somebody has talked. I'll give you a live example for this. AS7 is construction contracts and AS9 is revenue recognition. So AS9 speaks about recognizing the different revenues in the profit and loss account. But AS7 construction contract specifically talks about the revenues to be recorded, of the construction contracts. So sir, since AS7 has already given the recognition criteria of revenue from construction contracts, AS9 is silent. Means AS9 does not give you any treatment for construction contracts. Why? Because AS7 has already given it. So there is no alternative choice available. Because if one AS speaks something, other AS has to remain silent. Is this point clear to you? So these are my advantages and disadvantages of accounting standards. Anybody with any query with respect to advantages or disadvantages, or they want me to repeat any of the point of advantage or disadvantage, please raise your hand. Anybody with any point with respect to advantages or disadvantages? See, there are no specific AS to be taken in point number 4. I just gave an example. And when I'll be teaching you those AS, then I will talk about it. Now, say when I'm teaching AS 9, so every AS, if you remember, I had given a scope that every AS will talk about a scope. Scope means what it will not follow. So basically that scope will directly tell you that I will not be applicable because some other AS is applicable for it. So that becomes what a disadvantage. See, if AS7 and AS9 both speak about construction contracts, then you could have alternate accounting treatment possible, right? That would have been better for you. But AS says, no, I will not give you alternate treatment. If my AS7 is talking, AS9 has to remain silent. If AS10 is speaking about fixed asset, other AS has to remain silent. No two AS can speak about same things. Correct? See, AS itself are legal rules made by ICAI, but they cannot be overriding any of the act because AS are not any act. They are not, I will not say AS is any law. AS is certain standard practice, or I would say certain standard guidelines issued by ICAI for preparing your financial statements, right? They are not any act like your income tax act or your companies act or your banking act or your insurance act. It is just a standard set of rules and regulations which has to be followed by the enterprises for preparing financial statements. Right? Anybody else wants to raise a query? Now, as per the timing schedule, 10:10 we have to wind up the session. There is a small 5 minutes break in between. After that, 10:15 to 10:45 is your doubt solving session. Right? So in that doubt solving session, if anybody wants to raise a query over there, they can wait. Now those who don't have a doubt, they can leave the meeting, no problem at all. So we will be holding for 5 minutes now. And at 10:15, we will start with the doubt solving sessions. Fine. So those who don't have a doubt, they can leave. Thank you very much. Those who have a doubt, 5 minutes break. After that, we'll start.